Armour is a stock that caught my interest because of one potential catalyst. So the founder, Kevin Plank, is back. So he's back, the CEO. He wants to turn things around. So he has founded the company 20 years ago and has been the major shareholder ever since. He didn't sell his stake. And obviously, he saw his value decline as the share price declined. He lost over $1 billion in value, and now he's back. He wants to turn things around. And at the same time, we've seen some significant insider buying. 4 different insiders bought stock for a total of 1.5 million, and 3 of them did this for the first time. So there is some confidence inside the company. They think they're able to turn things around. But let's take a look. Why is Under Armour trading so low? Why is it down? So the revenues are falling, and due to competitive pressures, right? The competitors are doing better in their main market in the United States. So the revenues are falling over 20% in 3 years, which is obviously very bad. And because of this, also the cash flow is not there. They used to be generating quite a healthy cash flow. This is not the case anymore. Anything that they make, they spend on capex, on investing. So you're not getting any cash flow currently by buying this stock, right? So the competition is definitely a concern, right? Now, how cheap is it if you want to buy the whole company currently? So it's trading at around 1.8 billion in market cap. And on top of that, you need to add 1 billion in debt. Approximately, they have some long-term debt. They have some revolving facility. But in total, you would want to deleverage. You would need around 1 billion. So this will cost you shy of a 3 billion for the entire enterprise. And for that, you are getting 5 billion in revenue and no cash flow. So this is not a dirt cheap valuation. It's lower than their competitors are trading. This raises a question: is there a bankruptcy risk for Under Armour? Definitely is. If they can't turn things around, right? If they can't improve business cash flow, they're gonna have higher interest rates payments. They're gonna have difficulties refinancing. So at some point, it would be very difficult for them to pay off this debt. So you have to mind this risk if you are interested in this stock. Now, if the turnaround succeeds and they manage to increase revenues, improve cash flows, what kind of return can you expect from the investing at these levels, right? So the competitors would be trading at from 1.5, like Under Armour has been trading before, at 1.5 EV sales ratio, and the competitors would be trading also around 2.5, the best ones. So this would mean in a stock price somewhere between $10 to $15 per stock price for Under Armour. So you are seeing a potential gain of 2 to 3 times the investment, but of course there are significant risks to mind. It can also go to zero. So for me personally, I don't see sufficient value at this point. I hope it manages for the Kevin, the new CEO, the ex-founder, to basically come back and turn this around and make it a success story. But there are some risks here that are not aligned with my investment strategy. So also for you, do your own research. Of course, this is not an investment advice. I'm just analyzing stocks and showing positive and negative items. So this one is not for me. All the best to successful investing on your side, and follow me for next analysis.